It's come into my terminal here. It is time for our single best chart. The headline story of the day, I think, of course, is global dovish banks, falling yields. We had the German 10-year, of course, crossing 0% all the way back down to the lows of 2016. Take a look here in white. We have the Japan 10-year as well, following back down to the lows since 2016. And then the 10-year on Jay Powell's comments dipping below a 250. And, you know, Greg, talk to me about this, because we were speaking to some of our interest rate strategists and they were saying a 240 might not be far off. Do we see yields falling or rising from here, and how does that fold into your view on central banks?
Well, I think there's a possibility in the near term to see some further drawdown in yields, especially in the U.S. If we look globally, we're seeing weakness globally. We're seeing some slowdown in momentum. We're seeing the European economy showing some pretty weak data. The latest PMI data in Germany was quite weak. We're seeing just a general gradual slowdown in global economic momentum. Oxford Economics sees global growth around 2.6% this year. This is down from around 3% about 2 years ago. So we've seen that moderation in momentum. I think still the potential is that we see some movement back up in the medium term in yields, but that will relatively be dependent on how inflation evolves globally and how growth evolves globally. We are seeing some green shoots in Europe, which are interesting, but overall, if you look at the longer term picture, we're seeing moderating momentum and inflation likely to miss most targets around the world. So that is not really a sign that yields will move back up in a sustainable manner.